It's time now for a look at the day's business with France 24's Cole Strangler. Hello, Cole.
Hey, Nat.
And basically, the world's leading oil producers have agreed to boost supply, committing to restore cuts imposed at the beginning of the pandemic. So what else do we know about this deal, Cole?
Well, in large part, it reflects the global recovery that's underway. We've seen prices rise steadily over the last year as demand returns, more travel, more industrial activity, more fuel that's needed. All this has put pressure on oil producers to increase supply, to open up the spigot, as it were. That's precisely what this agreement does. The deal was reached Sunday by the group known as OPEC Plus. That includes more than 20 oil-producing nations led by Saudi Arabia and Russia. Under the agreement, output will increase by some 400,000 barrels a day starting next month. That boost in supply will then continue until the end of 2022, gradually reversing the cuts agreed to at the start of the pandemic. Now, the deal will also see a boost in countries' production quotas after United Arab Emirates successfully pushed for a bigger allotment. And in the end, that might be another big takeaway here, in that the UAE playing a bigger role within OPEC Plus. In other words, playing a bigger role in helping to set oil prices worldwide.
And how are traders reacting to the deal?
Well, oil prices are notoriously hard to predict, but there is a sense that this deal is going to help lower prices, and we're already seeing evidence of that with futures continuing to slide today. Global benchmark Brent crude falling more than 2.5%. As you can see there, it already declined in anticipation of a deal, now trading at under $72 a barrel. That's down from a 2.5-year high that was reached last month. As you can see also, West Texas Intermediate losing some value today as well.
And oil producers then clearly betting on a return in demand, but there's still a lot of uncertainty, isn't there?
Yeah, and it's coming from a few different places. A big one, of course, is the pandemic, which is threatening the global recovery around the world. But in particular, in the developing world, that's where growth in oil demand was highest before COVID. And of course, any new lockdowns or travel restrictions could upend the recovery. Now, in its latest projections, OPEC Plus does say it expects demand to keep growing into the next year. But even it acknowledges that concerns over climate change could play a big role in shaping markets, even if it doesn't use that term, climate change. More and more people using electric vehicles, which obviously don't run on gasoline, and then there are the prospects of stricter regulations on fossil fuels more generally. And just now, Annette, we're seeing major plans to reduce carbon emissions that are on the table, both in the U.S. and in Europe. And I think it's safe to say that those OPEC projections would probably look a little different if those plans were to become reality.
Indeed. Thanks for that, Cole Strangler.